Good morning, everybody. Good morning. Good morning. I hope you're all well on this beautiful Saturday morning. My name is Mahmood, host of the Numbers Rockstar show. Had the hair and makeup done. Obviously, probably less on the hair, less on the makeup there as well. So hope you've all had a fantastic week since we spoke last week itself. Hope the week's gone well. Hope your businesses are doing okay, if not much better. So for those of you who are just catching up on replay, obviously some wonderful content here. Have a listen and hope it helps you in your business journey there as well. So what are we going to talk about today? Well, today I've titled this Buzzwords and Jargon. So in every industry that we come across, you're always going to get a situation where people are going to throw words and jargon at you. And if it's anything like me, when I speak to IT people, love them to bits and all the rest of it. But when those words come flooding out, I see a disconnect. My eyes go all misty. I just want to get a pencil and stab my eyes out here. What they think is straightforward and simple doesn't necessarily translate that self into an understanding. Does it matter? Well, we're all good at what we actually do. So you might be a brilliant manufacturer, a brilliant retailer, a brilliant consultant, a brilliant trainer, a brilliant numbers guy, a bit of a plug here. But effectively, if you don't, I think, have an awareness of the whole dealings of business, and that includes language, you can become disconnected from that there as well, and you have a heavy reliance on somebody else to do those important things in your business itself. Now, for me, business, what we're going to run through today, we're going to talk about language. This is not going to be a recitation, by the way, of lots of buzzwords that I can come out with, just to make you all sort of get a bit losing the will to live. But it's about giving you a framework, probably reminding ourselves, myself included, of what business is about, why we're here, why we do it. We're going to talk about some of the framework of numbers people. So as you go along on your business journey, as you're dealing with customers, as you're making things, delivering services, behind the scenes, all those activities end up with some sort of financial impact there as well. And traditionally, we're used to them getting reported on an annual cycle. But for me, it's really important that you get to grips with them more regularly there as well. So we're going to look at those, what we call financial statements here, what they look at, what they measure. This show today gives you a flavour. Kind of looking forward to show. There's going to be some great bits that you can relate to your own businesses. Obviously, if you've got any comments here, feed them in. I'll answer what we can. And I'm going to give you a heads up towards the end of the show of what we've got in store for you for next week and the week after. And hopefully you guys will find that really useful. So without further ado, let's get on with the show, shall we? Now, by the power of magic, I'm a relatively newbie in the world of live broadcasting here. So if ITV, Netflix, or anybody else is watching, if you want to share some tips, I'm more than happy to take those on board. So we're going to talk about translating the language of business there as well. So we know we said, in the world of IT, every single profession has its own particular buzzwords. And they are quite useful, by the way, because they're shortcut for the professionals. But we're talking about not from the perspective of a professional, but the perspective of the owner, the one who's in that business environment. And we're going to try and demystify some of the terms and show why it's an important thing to get to grips with. And again, let's continue here. And there we go. You can see that beautiful little graphic unveiling itself. I think it's always useful at the beginning to remind ourselves why we're actually in business in the first place. Now, an obvious answer might be, well, we're here in business to make money. And that word money, by the way, has different meanings, believe it or not, for different people. So yes, certainly financial returns, making money is certainly a key objective. I'll address that on a subsequent slide, but we might have other motivations as well. There might be by circumstances. So maybe we've been previously employed, circumstances have changed, our lifestyle has changed as such, whether it's due to family, whatever, and therefore working for ourselves, running our business, is the most logical way to go. It might be having more independence, showing that you can actually have an impact on the people that you want to look after, the people you want to serve. It could be effectively being in charge of your own destiny. So if I draw on my own personal example, when I started in the world of business over 25 years ago, the reason was I had two careers that I left, well-paid careers. So probably either indicative of a foolish approach or risk making or whatever. I left those two careers and wanted to do something myself. I'd rather make my own decisions and benefit from them. Obviously, if it goes wrong, which it has done, and it still does occasionally, all business owners make mistakes, then I'm the one who carries the can, and I'm happy with that. There's a variety of work that you can take on. I like helping people. I also like making money, as we all do. So all those things there as well, a motivational thing in terms of personal motivation, attitude, lifestyle, all those things come together. And we need to remind ourselves occasionally why we're in business here, because when those things do get a bit tougher, it's always good to draw on that itself. One of those main primary purposes, as we're going to see on the next slide, though, is really whatever your business is. And let me just reinforce something here. I know we've got lots of terms floating around. So some people say solopreneur. Solopreneur is just somebody who works for themselves. You could say sole trader. We could say self-employed. Effectively, if you're an arts organization, if you're a charity, if you're a social enterprise, if you're a private company, doesn't matter what shape or form your business actually is, there's a commonality across those boards. And I use that word business, by the way, to describe all those different entities and all those different forms there as well. So if you're a social enterprise, if you're a charity, if you're a private company, if you're a solopreneur, a sole trader, a partnership, whatever form that your offer takes, the structure of it, you're a business as far as I'm concerned. If you want to use the word entrepreneur, that's perfectly fine. I use that word myself occasionally, but effectively we're talking about business here as opposed to what we're going to talk about on the next slide. Might sound a bit brutish here. One thing that I always would talk to individuals, clients, myself included, about is, what is your purpose in your business? Is it a hobby? And if it's a hobby, that's fine. And that requires a completely different mindset. Now, a hobby, and I have hobbies, but hobbies aren't there to sustain your lifestyle. So a lot of us are very good at what we do in our skill set. Effectively, if we want to make a business out of that, absolutely factored into that mindset, our key objective is that our business has to make money at some point. Now, it could be next month, it could be a few months down the road, but it has to make money. And let me emphasize something here. When we talk about making money, I replace that word money with the idea of profit. Profitability is the name of the game. If you do not effectively make a surplus, if you do not make money in your business here, your business won't survive. It won't sustain itself. You won't be able to make the impact that you wish to do with all your clients, the people and the communities that you wish to serve. Doesn't matter what form you are. If you're a charity, and I've worked in that sector for quite a number of years, and I've advised in that sector, I've worked in the private sector, I've worked across lots of different sectors, nationally and locally and internationally. If you do not cover and make money, i.e. profit in your business, you're not going to be here next month and you will not survive there as well. There are other elements that are involved in that process, but fundamentally, that's got to be an objective. Now, I think it's very important to remember how you make that money, what you do with that profit, who benefits from that profit. That's a part of the same conversation, and that's certainly got to be factored into account. Your ethics, how you do that, how much money profit you want to make, that's all certainly quite critical, but actually making it has got to be an objective. If not, for me, all you've got is a very time-consuming, very expensive hobby on your hands. And there lies the road to ruination. Now, in terms of language, I think one thing to understand here is there's a few things. Number one, finance and accounts people, I'm sure they don't do it deliberately, but if there's one word that exists to describe something, we're very good at coming up with at least another 5, 6, 7, 8 different terms that mean exactly the same thing. For those of you just catch up on live replay, thank you for your company here. Worthwhile going back to the beginning and listening to here. And we're talking here about buzzwords and jargon, language of business here, and not just the actual terminology here, but how we can actually tap into that to actually do better with our business itself. Now, when we look at the world of numbers, when we look at the world of accounts, when we look at the world of business, we have a separation that goes on. We have to separate out what refers to ourselves as individuals, what we might do outside of that business arena, and what we might also do effectively within the business itself. So in the world of business, there is a separation between those two. Let me give you a couple of examples. If you were what they call a solopreneur, and remember what we said about different varieties of terms coming up, you could be a solopreneur, you could be a sole trader, you could be self-employed. They effectively all mean the same thing. However, what you do at home, so when you go on holiday, for example, if you are in that fortunate position to do so, then money that you spend in respect to that activity is nothing to do with your business. If you then change hats and you're delivering services to a customer, you're selling goods to a customer, anything that's connected with that is part of your business there. So even though the law doesn't separate them out between you and the business there, in terms of the number language, in terms of the language that we're adopting, they're separating out. One of the biggest conundrums, and I think this is justified for a future broadcast, is when you have a corporate entity. So if you're in the UK, you might call it a limited company. If you're in the US, you might call it an LLC, I believe, a corporate body. And here's the weird thing. When you decide to run your business through a limited company, two things automatically happen. Number one, the company is a separate beast in legal terms otherwise, and it's considered a person. Strange, I know it might sound, but it's a person. You as the individual who are in that business, who are the owner, perhaps the director of that company, you are treated as a thing that's separate outside of that. And this has a bearing on the language that we adopt. So language that we use in our normal everyday conversation will not be the same meaning and the resonance in the context of business here as well. I'll give you a little flavor. A term that I'm going to introduce on the next couple of slides here is this word called liability. Now, in everyday conversation, when we talk about liabilities, we're talking about things that are quite bad for us. You know, an individual might be a liability because they're either not particularly good at what they do, they have such a behavior that have a negative impact. Liabilities are like burdens here. In the world of numbers, though, a liability is a really strange term that refers to money that's owed, a debt there as well. Now, I would say, you know, why not make life more easy and just call it a debt? Unfortunately, in the language of numbers and accounts and business, that is not adopted. Now, there are good reasons for it because regulation ticks into it, and therefore we have got what we call quite legalistic terms that are described there as well. So just remember, the word that you might come across in a business context is not necessarily the same meaning as you would have in the normal everyday conversation. So we've got to be aware of that separation. Now, if I my magic mouse, let's move it across. Now, let's get into the meat, effectively, of this presentation. Let's get into the meat of what this broadcast is about, and that's about the language that we might adopt and how we should be looking at our own businesses here. And this applies, again, whether you are a small sole trader just starting off, you're at the beginning of your business journey, you could be a maturing oak who's a couple of years into their business journey, or you might be a massive oak tree here with activities spread across. But for me, what we need to do is to think about the language that we use to describe those business activities. Let me tip into an industry that I'm particularly keen of. I had a short career in this industry in the hospitality sector. I actually like this sector because obviously we all like to socialize. We all like to go out to eat. We like to get takeaways. We might like to meet our friends up for a drink for a wine bar or a pub or a cafe or whatever. So that broad brush of the hospitality sector is something I think all of us can relate to. Now, if I was beginning a hospitality business, let's say a cafe, then effectively I would be looking at what my business does in terms of, you know, serving food, serving beverages, serving drinks to my customers. Now, that activity results in what we all like. It results in a financial transaction. It results in money changing hands. Now, if I put myself in the shoes of the business, which we must do, that business, which is effectively could be you or your company, effectively has generated what we might call sales. The activity is serving food. The activity is serving drink. In financial terms, in the financial language here, that's called sales. Now, some of you might be thinking, hang on, I've heard other terms for that. And you're quite right there. Because in other terminology, remember, all these terms that float around, as a working definition, sales is fine. You could use the word turnover. You could use the word revenue. You could use the word income. There are little nuances of difference between those terms, but I think just in terms of connecting with your business there, just think of it as sales. Sales relates to what I do, what I provide to a customer, what's the financial value of that, and that's my sales or turnover or revenue. For me, for management purposes, for running your business here, day to day, just pick the term that sits more comfortably with you. Now, in terms of doing that activity, we can't get that cup of coffee. We can't provide that meal to that customer. We can't effectively serve anything to that customer unless we've got something to provide to them. So typically, we might be going out to purchase, to buy, to procure food, drink, so we can resell it. And when we buy that from the customer, our intention is not to make it sit in the cellar or the larder or our storeroom, but we want to actually sell that out and sell that onto the customer. That activity is the actual buying and then providing it to the customer. And again, we typically might call that effectively costs. And cost is a very generic term. And for us, what we might want to do is to break that down into a little bit more detail and call that, for example, cost of sales, direct costs. Again, you've got a couple of terms there as well. If your head's going a little bit ropey there, thinking of all these terms coming out, I'm going to give you a little bit of a, what do I call it, a call to action, a reference point here, where with a cup of coffee or something a bit stronger, perhaps, you can have a look through and actually get a bit more information coming through. So effectively, always look at your business in describing it, what it does. It sells things. What does it sell? It buys things. What does it buy? Once you've got that, then you connect it with the official language that might float around. What we're really trying to do here, the whole purpose of today's broadcast and all other broadcasts here, is to get you business owners out there who work very hard. There's a lot of roller coaster activity. Running your own business is not a 9-to-5 activity. I'd like you all to make lots of money, lots of profits. That sustains yourself, keeps you happy, keeps you motivated, helps your family, and helps you carry on providing those services to other people. You want to be here, one assumes, not only today, but in future months, future years ahead. So getting closer to those numbers, becoming more acquainted with those numbers is going to be a really great benefit to you and your business. As a business owner, you have to move outside of that skill set of what you do really well. I'm not going to tell everyone how to effectively run a cafe in the sense of how to serve a cup of coffee to somebody. I'm not going to tell somebody how to be a brilliant trainer. I'm not going to be doing all those things. I'm not going to tell you how to develop your own individual skills and expertise, but certainly in the realms of making money, getting closer, making better money, is certainly what we're going to be aiming to do. Now, I bet you're sitting there thinking, okay, Marie, come on, let's get on with the next slide. So that's what we're going to do. Now, let's just throw a few terms here. I don't want this to make it like a death by PowerPoint. I'm just going to recite 20 words to you. I'm just going to give you a flavor of what I would say are the main ones that you need to get comfortable with. So we effectively wish to make a profit. That's certainly a noble and an absolutely essential requirement. That profit is measured by comparing effectively two numbers. We have the value of what we're selling onto a customer. And what we're selling onto a customer, again, it could be a physical good, it could be a physical product, or it could be a service that we're selling in as well. And what we're going to describe that as is we're going to call that sales. Again, some people might call it the word turnover. Some people might call it revenue. If you want to be purist, by the way, the reason that people use the word revenue, because you may have different products, you may have different services, and revenue describes the whole bucket, the whole basket of those items. I would say, personally speaking, be a bit more relaxed and focus what resonates with you more closely. And sales, I think, is a great way to actually, as a bucket term. So the value of what you've sold is sales. And it makes no difference, by the way, at this stage of the game, whether your customer has paid for that item or not. And we'll deal with that little conundrum in future broadcasts. So I sell something today. It has a monetary value of X. The invoice goes out to the customer. That's a sale. Step one. Now, against that, I've got to think of the items that the cost that I've had in order to generate that sale. Typically, if we think about the hospitality example, I bought some food, I bought some drinks, some beverages, I sell those on to the customer, and those are my costs of providing that there, and they might be called cost of sales. The whole idea being, that's what I'm selling, that's the thing that I'm selling, I'm going to connect those two together. Now, there might be other things as well. If I've got a business that I employ staff, I might have some front of house staff. I might have some people in the kitchens preparing the food. Front of house staff, obviously waiting on tables, making sure the tables are clean, letting people coming in. You know, model it to your own business there as well. Well, those wage costs, the wages that it costs me to employ those individuals, is part of the cost of delivering and providing that service. A couple of other suspects that we might have. Well, we might have, you know, the rent that we're paying on the establishment. We may have the cost of the advertising, the promotion, telling people that what's going on. Now, if we lump all those together, I'm going to give you a bit of a snapshot. You've got sales at the top line. You've got what the food costs have been to make those sales. You then got some profit that's coming out. And to add to that, we're going to use that word gross profit. Now, it's not because it's uncomfortable, it's horrible, but that's a gross profit. We then take off everything else that's connected. So all those support costs, so things like the rent, front of house wages, advertising, promotion, and you're left with profit there as well. And in terminology wise, we call that net. Now, if we continue, in order for me to run this business, I might have had to invest money in buying ovens. I might have had to invest money in buying fridge, storage containers. You know, I want to make sure the food is kept fresh as much as possible. So those generic umbrella things here are called in conversation, they're called assets, and that's what they're called in a business. And just to add a couple of little bits of terms here, if you've got those items, you're intending to keep them in the business, they're called fixed, not because they're bolted to a floor, not because they're actually physically fixed to something, but because we buy them to keep them in the business itself. That's our intention. Now, to make all this cycle works, obviously, we need cash going through the cycle, which we talked about in earlier shows, and we're going to resurrect that conversation because for me, a business as it's going, as it's maturing, profit is the name of the game. But in the short term, it's not unnatural that you may not make a great deal of profit in the early stages. Certainly, if I think back 25 odd years ago, when I started in business, the first couple of years here, I was literally working different things just to keep things going, part-time jobs, just to keep the money coming in, and working from my back bedroom at the time here. It took time for that business to mature and grow up. I should point out, by the way, I have moved out my back bedroom since then, but it takes time. If you expect to make money or profit straight away, you're going to be sadly deluded if you want those profits to be sustainable. So it's going to take time for that to mature. And as we've said before, cash is the number one thing that's going. Now, let me just wrap up with a couple of little slides. And again, by the power of magic, let's just flag these up. This isn't just to make it not too top heavy. You've got three statements you're likely to come across. I'm going to give you a little bit of a flavor here, and then we're going to talk about these in future shows. You have a statement that measures how your business is performing. It's called a P&L, which is the shorthand. Notice how finance people love jargon, by the way. P&L just means profit and loss. Effectively, some people call it an income statement. Some people call it an income and expenditure. Some people call it just effectively a profit and loss or P&L. Does it make any difference? Not really. It's a statement that shows what you've sold, what it's cost you to make that sale, and how much profit you've got left over. Number one. Number two is, how strong is your business? Now, if your business has got lots of money that it owes to suppliers, lots of money that you borrow from the bank, lots of money that you owe to friends and family in order to get that business going, you've got HP and finance outstanding on your vehicles, your car, your computer, then that's a lot of debt. If you don't have a lot of assets in the business, just like your own personal circumstances, you're going to be up, how can I say it politely? It's SH and fill in the two asterisks. It's going to be very difficult to keep that business going. So your statement that shows how strong your business is what we call a balance sheet. It's a snapshot in time, and it's taking a camera going, snap, That's what is going on with the business. Viability, name of the game. In order to continue for today, for next week and the week after, you need access to cash. And therefore, you might have a cash statement that shows you how much money is flowing through the business. And by money here, we're talking about cash. Fundamentally, there's a truism. If you don't have access to cash, close the doors, your business will not survive. If you have access to cash and you're not making a profit, your business can survive. That's no problem. Eventually, you want it to make profits, but in the short term to medium term, you can survive as long as you've got access to that cold, hard cash. Now, if this works, which hopefully it should do, there we go. Now, ladies and gentlemen, I really thank you for your time today. I'm going to give you a heads up here, some good to know here. Check out those links, check out those resources. I've got a podcast going here. It's going to talk about a lot of things we've talked about before. Website's got lots of free resources here. So have a look at it, check it out. If you've got any issues that you want to talk about on future broadcasts, let me know. We are going to be evolving the show as time goes on. So just hopefully you can indulge me as I get a bit better with the tech and everything else. But we've got some guests coming up in future shows. So we're going to shine the spotlight on businesses and get some insights from them about how they feel, how they approach their businesses, stories they can share. If you're listening on replay, obviously fantastic. That's really appreciated. Any comments, any feedback, greatly appreciated. If you got some value from that, love it if you could share this. I'm just going to throw him up on here. I'm just going to flag up one of our future guests. Hopefully we don't embarrass him. So Richard from WorldMax is going to be a guest on our show around about mid-May. My people have got to talk to his people, and then we can get that organised and make sure the green room has got lots of M&Ms stored up for him. So listen, guys, have a great weekend. If you like the show, which I hope you do, I'd love it if you could share on it, comment. Failing that, have a fantastic weekend, and I'll see you guys next week.